We're joined by the Chief Investment Officer at Octopus Investments. He's Lothar Mentel. Lothar, not just about the UK, we're talking also about the rest of Europe. But let's just kick things off with what Jennifer Jonley was talking about in her report there. Does British manufacturing have the ability to lift this economy higher, or has it just been reduced far too much?
I think it does have the opportunity, particularly with sterling being quite weak and therefore our export industry being quite competitive. That is the one hope that we have for the UK economy, because domestically, let's face it, there's not that much demand.
So what are we looking for out of the data this morning, 9:30 UK time?
Well, I'm always an optimist.
No, you're not, Lothar, actually.
So I'm thinking it will probably be slightly better than perhaps expected, but that doesn't mean to say that the UK is on a general upward trajectory. I think the UK internationally is probably one of the weaker cases at the moment. We did have the biggest of the, well, one of the biggest of the banking crises, and therefore we're still in the credit crunch. Domestically, not so great, but in terms of what does that mean for the stock markets, well, the FTSE is not just the UK, it is predominantly international companies, and therefore let's not get too worried as investors in the FTSE about what's happening domestically in the UK.
So stick with the large caps is what you're suggesting here, in the UK at least. But the UK has these problems, the Greeks have these problems as well, and you've been, or people in your company, have been buying Greek debt, which tells me that you don't believe that this is really something which is going to play out negatively at the end of the day with Greece falling out of the euro.
What we're seeing this year is a lot of trading volatility, a lot of overreactions to news. Investors are very nervous, the markets are jumpy, unnerved by what's happened over the last 18 months. That's offering trading opportunities. So I'm not saying I'm a long-term investor in Greek bonds, but whenever it goes up or down, we are buyers or sellers, because this year it's not about indiscriminate downs or ups, as we saw in 2008 down, 2009 up. This year it's more about trading.
But generally speaking, if we look at the equity markets overall, skittish is one way you could describe them. Why?
Well, let's face it, institutional investors like us have sort of a career risk. In 2008, you know, there was a big crisis going on, so getting it wrong then wasn't a huge problem. Now that everybody knows there's a problem out there, it is a big problem for any institutional investor, for any fund manager to be losing money, and therefore they're reacting extremely to any piece of news that creates that skittishness, but also, thankfully for us, opportunities.
Lack of belief. I mean, a lack of belief in the economy and the fundamentals could be part of it as well. And do you buy into this notion that there's no way we're going to have a double dip?
I'm not buying into the notion that there's no way. There's always a possibility that something happens like a double dip. We think the probability is low, but that almost doesn't matter at the moment. At the moment, what matters is nobody wants to lose any money, and therefore they're very quickly moving in and out of positions.
Okay, let's take a look at one of the themes of late, particularly in the UK, but elsewhere as well. Banks. How do you feel about them after the run-up that we saw from March last year?
I think there isn't too much opportunity in banks anymore. I think they've had their run. There's still a number of problems globally around the banks. I think it's good that our state banks in the UK are rebuilding their balance sheets on the basis of the extraordinary gains that they could make last year. But overall, there's still quite a bit to come.
Okay, so avoid the banks, but where do you go then, very quickly?
We've been going into the US equity market more broadly again. We have cut back on our exposure to emerging markets, which we believe had the best of their run, and we might well see a good relative catch-up by the more developed markets, particularly the US.
Lothar, great to see you as ever. Lothar Mentel there from Octopus Investments.